Welcome to my YouTube channel. My name is Alex. Uh, in our last episode, we talked about Forex and some basic terms used in Forex. So, in this episode, we are going to continue from where we stopped on the last episode, which is some basic terms used in Forex trading. And without wasting much of your time, the number one term we are going to be looking at today is lot. Lot. So, what is lot? A lot is a standard unit for measuring the volume of currency position opened by a trader, and we have different types of lots. And understanding these different types of lots, you can know your risk appetite. You know, basically, if you have $100, you will know the kind of lot you are going to use. If you have $1,000, you will know the kind of lot you are going to use. Or if you have, let me say, if you have maybe $100 account and you want to risk some certain percentage of that account, you understanding the lot size, you will know the kind of risk you want to use. So now let's dive into the types of lots we know and explain them one after the other. We have about three, or maybe let me say four types of lots, but forest trade normally use only three. The last one is not that commonly used by traders. So let's dive into the types. We have one standard lot. Standard lot. Now this standard lot has about 100,000 units on the base currency. Standard lot has 100,000 units of the base currency. Let's take a currency like the Euro USD. So a standard lot has 100,000 units of the base currency. In our last episode, we talked about base and quote currency. We said the first currency in the currency pair is called the base currency. So in this explain the standard lot, we said the standard lot has 100,000 units of a base currency. So if you are buying Euro USD and you are using one standard lot size, that means you are buying 100,000 units of this base currency, and it's written as one as a standard lot. One standard lot written as one. Now the second lot size is a mini lot. Mini lot. And this mini lot has 10,000 units of the base currency. Mini lot has 10,000 units. This one has 100,000 units of the base currency. This one has 10,000 units of the base currency. Now, and it's written as 0.1. So if you are buying Euro USD with mini lot size, it means you are buying 10,000 units of the base currency, and it's written as 0.1, which means mini lot size 0.1. Then the third one is the micro lot. The micro lot has 1,000 units of a base currency, which is written as 0.01. So the last one is a nano lot. So we are not going to be using this last types of lot. So now basically we have three types of lot size. We have the standard lot, we have the mini lot, and we have the micro lot. So the next thing we are going to be looking at in this episode after lot size is PIP. So what is PIP? PIP is an acronym which stands for percentage in points. And let's say currency pairs, they move with tiny increments, and the increments are measured in pips. Let's use Euro USD as an example. Euro USD. So if a price of Euro USD is at 1.2005, for example, then after some seconds, the price moves to 1.2006. Now we can say that the price of Euro USD has moved from 1.2005 to 1.2006 with one pip increment. One pip increment. It has increased with one pip. Then if this price moves to 1.2008, then we say the price has moved from 1.2006 to 1.2008 with two pips. Then now the next thing I'm going to be looking at is analysis. Analysis. Now what we have about three types of analysis in forex trading. Before you can take any trade, you have to take these three analysis very seriously before opening any position in any currency pair. Now what are these types of analysis? We have the fundamental analysis, we have the technical analysis, and we have the sentiment analysis. Now what is fundamental analysis? Fundamental analysis is basically is basically checking the economic stability of that country currency you want to trade. Checking the economic stability. Maybe if they have political crisis, it can affect the country currency. If they have like um natural disaster, or if the country is not that it's not peaceful, they have like political war, anything that can affect their economy, it can also affect the country particular currency. So you should check the country economic stability before you can dive into that currency, before you can trade that particular currency. Now the other now the other analysis is technical analysis. Now this technical analysis has to do with the chart, you know, studying the charts, looking at chart patterns, looking at some other candlestick, checking the technicals in the market before you can, place a buy or a sell. Now the other analysis, which is called the sentimental analysis, this sentimental analysis, you are checking the views of other traders, other top traders, if they are buying a particular currency or they are selling that particular currency. Maybe you have two gurus that predict Euro USD to buy, then other two gurus are predicting Euro USD to sell. Then some other people are predicting that same currency to buy. So when you are checking those sentimentals, you should know that okay, you have more people saying buy than people saying sell. So you can choose to say okay, because people that are saying buy are more, you can choose to buy that particular currency pair because you have more traders that are buying. So that's basically sentimental analysis.